Hey everyone, Nick Nielsen, Certified Financial Planner. Today I wanted to talk about risk and the perception versus the reality of certain risks. When I meet with people, generally they are much more afraid of market volatility risk than longevity risk. And if you're not sure what longevity risk is, that's just the risk of potentially outliving your money. So, when you retire, you have probably a 3 decade or longer time horizon to utilize your assets. And a great example there at trendline 3% inflation, a $10 burrito today turns into a $25 burrito in 30 years. Because of the grinding power of inflation, we have to invest for the long term. So for many, market volatility is a fear that keeps people from investing for long-term growth because they think that is the safe way to go about investing. The reality is that that's probably the riskiest way to invest. If we define risk as the permanent loss of purchasing power, investing more conservatively by traditional metrics is really the most riskiest way to invest. In contrast, by investing for long-term growth, whether that be in stocks, real estate, cryptocurrencies, NFTs, basketball cards, antiques, cars, wine, art, etc. When we invest for long-term growth, yes, we take some market volatility, especially in short to intermediate term periods, but investing for long-term growth is the best way to compound that grinding impact of inflation over time. The reality of risk would actually flip this seesaw equation around. The big risk that we face is longevity risk. How do we combat that? We're willing to take times of market volatility by investing for long-term growth. We combat the very real risk of longevity by investing for long-term growth. That means that we have to accept periods of increased market volatility, but that is the price we pay for getting the long-term return in growth assets. I hope you consider rethinking about what is a safe investment versus what is a risky investment. And based upon that, does your current investment process and your investment plan make sense for you in funding your goals over the lifetime of your financial plan?